If we could get to 5,000 by the end of the year, is it possible? Yeah. I mean, we're up 56% this year. Another 20% or another 15% would not be shocking. Okay. I think that there's a greater probability of a pullback, a continued pullback, and not because there's anything wrong with the gold. When markets get overbought, when people get over leveraged, when the FOMO finally wears off,
silver's going to the moon, the shorts are all going to be busted, and silver's going to triple digits next. If gold and silver keep screaming high from here, I will make more money. But if that's not right, if it goes crashing down to, let's say it goes down $1,000 an ounce, Elijah, that's still well over $3,000. That's a great level for which the miners can make money. So it's not the end of the world. But of course, the stocks would just tank.
In a recent discussion on the state of precious metals, market veterans Todd Bubba Horwitz and Lobo Tiggre shared their outlook on where gold and silver could be headed next. With gold already up over 56% this year, the question many are asking is, can it reach $5,000 by year's end? According to them, it's possible, but investors should brace for volatility. They emphasize that while another 15–20% rally isn't out of the question, markets often need to cool off after major surges. Overleveraged traders and fading FOMO can trigger short-term pullbacks, but that doesn't change the long-term picture. Gold remains strong, and even if prices drop to $3,000 an ounce, mining companies would still be highly profitable. Silver, on the other hand, could be gearing up for an explosive move. Some believe a triple-digit silver price might not be as far-fetched as it sounds, especially if global supply tightens and investor sentiment turns bullish again. Whether we see a breakout or a breather, one thing's clear. Gold and silver are back in the spotlight, and this could just be the beginning of their next great cycle. Don't forget to like, share, and subscribe for more market insights.
The central banks who've been a big buyer of gold, they want to buy it cheaper, so they put out this statement. Again, I'm not saying anybody who did it, I have no idea who did it, but definitely it was done with a purpose. We all know that when there's money involved, the charlatans are going to do what they can do to try to create a better opportunity for themselves. This is criminal. They do belong in jail. They have destroyed a lot of people's wealth, even with this little bit of move, because a lot of people invest a lot of their percentage of their portfolio, and we're buying at the $4,400 level in gold, and they might not be able to hold it. So this is a criminal event that has to be stopped, but this is the problem when you have artificial intelligence and you're pushing it without really figuring out the true power of what it is.
Whenever something goes vertical, whenever something goes into hockey stick mode, it is reasonable and prudent and experience-based to at least pay attention to that and understand that can't go vertical forever. Like no price can go in a straight line up forever. And the longer it does, the more likely the correction and the more extreme the correction is likely to be. If something is, going up at a reasonable pace, it's not so likely to come screaming down. Or there are a lot of conventional market wisdom words here, adages and things. Like, for example, the markets will take the stairs up and the elevator down, that sort of thing. That's based on real-world experience, Elijah. So I'm not saying the market is stopped. I'm saying it is reasonable and prudent to make sure that you don't let a big move up like this slip through your fingers. This is the number one message I've been really pounding the table on the last week or so.
There's going to be a pullback. Don't worry about it. Use that as a buying opportunity. Look, precious metals have not changed, and with central banks participating in buying them, that's telling you that we need to have that as part of everybody's portfolio.
I'm not telling anybody to sell out completely or that the market is peaked. I'm saying make sure that your big wins don't slip through your fingers. I mean, imagine you're some long-suffering gold bug who's been waiting years or decades for something like this. Do you imagine how bad it must feel to be right and then not make any money on it? That's really the point here. Is I'm not making a bear case. I am saying that nobody should lose the opportunity on the table. Nobody should be forced to suffer being right about the market and not make money off of that. So choose your own strategy. I have something you and I have discussed before called the upside maximizer. You don't have to copy me. You can do it however you want, but don't let big wins slip through your fingers because nobody knows what happens next. If silver really was finally catching up to gold, even your most diehard silver bulls will tell you that silver usually lags gold at first and then more than catches up at the end of the bull market. So if we were in that catch-up phase, that would signal the end of the bull market. And I don't think we're there. I'm a fundamentalist. I don't think we're there for all those reasons we articulated earlier. I don't want it to be there either. I want it to go higher. Mr. Market doesn't care what I want. But I neither want nor think that we're at the end of the market. So silver catching up to gold was a concern to me. Silver catching up because of the physical squeeze in London that did not apply to gold is a huge sigh of relief for me. And, we'll see where it goes next. This does mean I think that there's potentially more volatility to the downside in silver in the near term than in gold. But, that's not a surprise to anybody in silver and gold. We all know that silver is more volatile than gold.
In the ever-volatile world of precious metals, recent developments have sparked intense debate. Some analysts believe that large-scale central bank activity and strategic statements are influencing short-term gold price swings. The sudden correction from record highs has raised concerns among investors who bought in near the $4,400 level, leaving many questioning whether manipulation or algorithmic trading played a role. Experts warn that while gold's long-term fundamentals remain strong, no market can rise vertically forever. History shows that sharp rallies are often followed by equally sharp pullbacks. The markets climb the stairs up and take the elevator down. This is not a signal to abandon precious metals, but rather a reminder to protect gains and manage risk wisely. Central banks continue to accumulate gold, underscoring its importance as a hedge against currency devaluation and financial instability. The current pullback may prove to be a healthy correction rather than the end of the bull market. Silver, meanwhile, remains more volatile but could offer greater upside once momentum returns. In essence, the message is clear: stay disciplined, stay diversified, and don't let short-term noise distract you from the bigger picture. Let's get into the interview.
Damage that they've done with the fiat currency system without any underlying asset has ballooned many asset classes out of control because people just trade the interest rate and the money. They're not really buying a house, they're buying the money. That it's a buy the month society. So I would suspect that central banks will continue to accumulate, and I would suspect that at some point that Besant and Trump are going to try to get some kind of underlying asset to back the dollar.
Before this week's correction, when we're still in this hockey stick mode, a lot of the pushback I was getting for saying, hey folks, whenever you got a hockey stick, nobody goes broke taking profits. Oh, and by the way, I said the same thing in early 24 when uranium went triple digits. And I got so much hate for anything other than uranium's going straight to the moon. And look at history. like look at what happened. So I was saying something similar about gold. I was not calling a top. I was just saying, hey, some correction here is not to be is not unexpected. And then I had chartists responding. But look, in 1979 when gold was screaming up towards $850 an ounce. Look at that chart. There's no correction in there. It's just a smooth parabola upwards. Okay, let's accept that. Let's stipulate that as, what happens as you go into the blow off top. As we were just saying before, I don't want this to be the blow off top. Mr. Market doesn't care whether I want it or not, but based on the fundamentals, I don't think we're there yet. So if we weren't there yet, looking for some correction, an interruption in that parabola made sense to me. Right? That's not a bear case. It's just saying that, it's not an end market case. All right. And so I think this break is actually, people hate hearing about a healthy correction. But in the context of my longer term bull case, I actually do think this break is a healthy correction. Because if it just continues screaming upwards, well, Elijah, we would be looking at a blow off top. And, okay, I'm long. Our audience is probably long. We could make a lot of money in the near term in this blow off top if that's what was next. But that would be it. That would, the most likely thing after this vertical move would then be a bear market for years, like a screaming back down in the elevator and then a bear market for years. Who wants that? Now, again, Mr. Market doesn't care what we want, but I'm just saying, be careful what you wish for. Nobody goes broke taking profits. It doesn't mean you're a bear. And it does load you for bear. Like, if we get a correction, you'll have funds to do something about it with. And so, yes, I think this kerfuffle we've had over the last week is very encouraging to me. It tells me that we're probably not at the blow-off peak yet, and that is a good thing.
In the fast-changing landscape of global finance, the recent correction in gold prices has sparked a mix of fear and opportunity. Analysts emphasize that the real issue lies in decades of unchecked fiat currency creation, which inflated asset classes far beyond intrinsic value. Central banks, aware of the system's fragility, continue to quietly accumulate gold, perhaps preparing for a future where the US dollar regains strength through some form of asset backing. The current pullback, though unsettling to some, may actually be the best news long-term investors could hope for. Parabolic price moves rarely end well. They often mark exhaustion points before sharp downturns. A measured correction, on the other hand, helps reset the market for a more sustainable climb. This phase isn't the end of the gold bull run. It could be the foundation for its next leg higher. The message is clear. No one goes broke taking profits, and disciplined investors will find new opportunities when the dust settles. Stay patient, stay rational, and remember, in markets driven by emotion, calm conviction wins every time. If you found this analysis insightful, don't forget to like, share, and comment below with your thoughts on gold's next move.